The number one question I'm getting every day from clients is, should I wait until the Fed meeting for rates to come down? Does a quarter or a 0.5% rate reduction mean mortgage rates should come down a quarter or a half? And let me tell you, that's not how it works. I don't foresee rates changing really at all, even the day of that announcement on the 18th, whether it's a quarter or a 0.5%. Think about it, rates are down 1.5% since 2023, yet the Feds have not lowered their rate yet. If you go back and look in history, back in 2022, when inflation started ticking upward and unemployment started ticking upward, interest rates spiked 1.5%, yet the Fed, as before the Fed ever made any rate increases. So although the Fed policy definitely impacts long-term mortgage rates, this reduction in the federal funds rate on September 18th, I don't see it having any immediate impact on long-term mortgage rates.
What do you think rates will do through the end of the year, into like Q1 25?
I think the economic reports that are coming out will drive ultimately where rates go. We have this week we have the ADP report, the jobless claims report. We have the unemployment report coming out on Friday. These economic indicators will dictate where the market goes going forward more than and what the Feds say in their meeting. What the Feds speak and what they say in their meetings, that will drive ultimately long-term rates downward, I believe. But the actual rate reductions that are going to start on the 18th will have very little immediate impact on long-term mortgage rates.
Right. The actual mortgage rates have already baked in the sentiment that a rate cut is coming, and I think it's already happened. What will be interesting to see is what the Fed will also release on the 18th, their Q4, kind of their forecasts of the rest of the year.
That's right.
And based on what they say there, that will impact.
I think what what Powell says at his Fed meeting will have more of an impact than anything else as to where rates will be going forward. And I do think that long term, toward the end of the year, into 25, I do think rates will tick downward very, very slowly. But people think we're going back to the rates of 3 and 4%. I don't see it happening. I think next year we'll end up probably around 6%, maybe in the lower or upper fives. But I don't see much lower rates than that in the foreseeable future.